Welcome to the third part of the tutorial on company introduction and issue of share. In this third part, we are going to learn about the accounting entries or journal entries for issue of share at par or at face value. Par value means face value. So whenever you are receiving the application money from the potential investors, then bank account debit, share application account credit. And whenever the application money is allotted, that's why here we can see application credit. So whenever you are allotting, application will be shown in the debit side and you are allotting as a share capital. If there are dues on account of share allotment or calls, you have to journalize as share allotment account debit, share capital account credit. As a company, if you receive oversubscribed application, that means suppose you are issuing 1 lakh share, but as a company you have received 1,20,000 application, then some of the application should be rejected or returned. In that case, the journal is share application account debit, and since you are returning the amount, that is why bank account credit. The detailed journal is share application account debit, share allotment account credit, calls in advance account credit, and the amount of return is shown as bank account credit. And whenever you are receiving the money of allotment, then the journal is bank account debit, share allotment account credit. If there is any shareholders who fails to pay the allotment money, in that case, that amount should be journalized as calls in arrear account debit, share allotment account credit. And whenever you are collecting the money of each unit of share in an installment process, and if there is any first call or second call, then the journal would be share call account debit, share capital account credit. And whenever you are receiving money from the call, then the journal is bank account debit, share call account credit. Share call can be first call or second call or final call. But if there is any non-payment of call money, then the journal is calls in arrear account debit, share call account credit. Here, share call could be first call, second call or final call. And whenever you are adjusting the calls in advance, then the journal is calls in advance account debit, share call account credit. However, this is the theoretical discussion on journalizing process. We are going to learn the practical process of journalizing. From this illustration, we can see VD Electronics Limited issued 1 lakh equity shares of taka 10 each. From this 10 of par value, you are going to collect the money in installments. In the application, you are going to receive taka 2. In the allotment, you are going to receive taka 3. And in the final call, you are planning to receive taka 5 out of total value 10. Although you have issued 1 lakh equity share, but there is a application from the public for 1,20,000 shares. Since there is a excess application, you are going to refund the money of 20,000 application. All the other amounts were received excepting the final call money on 1,000 shares. That means although you are going to allot the share of 1 lakh, but out of this 1 lakh, there is a failure from 1,000 shares who fail to provide the final call. However, from this information, we are going to learn the journalizing process. We can see these are the journal entries for the issue of share. We can see from the information or illustration, the company issued 1 lakh equity share, but they have received application for 1,30,000. So the journal is bank account debit and equity share application account credit. You are receiving application for 1,20,000 at the rate of 2. Total amount is 2,40,000. But out of this 2,40,000, 20,000 share is additional out of your issuance. That's why those additional or extra applications should be refunded. We can see the excess application will be refunded and the remaining 1 lakh will be allotted. The remaining 1 lakh will be converted into share capital. That's why here the equity share application is credit, and whenever you are transferring the application to share capital, equity share capital account credit with the amount of 2 lakh, because you are converting 1 lakh share at the rate of Taka 2, and the remaining 20,000 share at the rate of Taka 2 will be refunded. That's why bank account credit. So whenever you are transferring the share application to share capital, the journal is equity share application debit, equity share capital credit, and the bank account credit with the refunded money, which is 40,000. And you can see you are going to receive Taka 3 for the allotment, and whenever you are deciding for the allotment, the journal is equity share allotment account debit, equity share capital account credit. And out of this allotment, whenever you are receiving money, the journal is bank account debit, and here this allotment would be shown in the credit side, equity share allotment account credit. And when the board of directors decide to call the final call, then the journal is equity share final call account debit. You can see the amount of final call is 5 each. So total 1 lakh share at the rate of 5 is 5 lakh. So whenever you are deciding to invite the final call, then the journal is equity share final call account debit, equity share capital account credit. And whenever you are receiving the money from the final call, then the journal is bank account debit and equity share final call account credit. Here we can see from the illustration or question, there is a information that the final call from 1000 shares were not received. That means you have received from 99,000 shares at the rate of Taka 5, that is total 4,95,000. So this is the process of journalizing for the installment basis in fixed price issue of share. Thank you.